Hey, if you're into cryptocurrency, Bitcoin is doing something it has never done before. Taking a look at the chart since the beginning of 2023, it's clear that the Bitcoin price has consistently marked higher lows and is currently consolidating near local highs. What's even more promising is the strength of the underlying network, as evidenced by the increasing daily volume. Bitcoin is now part of the 10 million plus club in daily volume. Now let's talk about ordinals. They're like NFTs, but on Bitcoin. Remember how the NFT explosion played a significant role in Ethereum's rapid surge back in 2021? Well, in some never-before-seen footage, billionaire Michael Saylor comments on just how substantial NFTs on Bitcoin are. It's a game-changer, and the impact is fascinating. The entire discussion of ordinals inscriptions is important to Bitcoin for two reasons. One, for Bitcoin to be successful over the long term. The Bitcoin miners have to be successful, and two, for Bitcoin to scale to 8 billion people and be embraced by every company, every government, every person on Earth. We need to build applications on the Layer 2 and the Layer 3 in order to extend the functionality and the performance and the scalability of Bitcoin. So if I were to basically discourage application development, I would be making it harder to scale to 8 billion people, and I would also be destroying the Bitcoin mining network. I'm excited to talk about the latest developments in the world of crypto. We'll be diving into the top ordinals projects currently in the works, along with a new altcoin on Cardano, launched by none other than Charles Hoskinson. But let's focus on a groundbreaking moment today. The CME Futures open interest has just hit a historic milestone, surpassing 100,000 Bitcoin for the very first time. The surge in open interest is remarkable. If we switch gears and look at the same chart in US dollars, it's approaching all-time highs. Now, why should you care about open interest? It's essentially the total number of futures contracts held by market participants at the end of the trading day. And while a high open interest doesn't necessarily predict whether Bitcoin is about to surge or drop, it's a crucial metric. Keep in mind that a futures contract can be either bullish or bearish, indicating whether investors are betting on the future price of Bitcoin to rise or fall. This metric provides valuable insights into market sentiment and activity. Let me explain this in a way that's easy to understand. Things are really starting to get interesting with Bitcoin. We're expecting some big changes, whether they're good or not so good, and the market could really shake up. I'm keeping an eye on this, and if you're invested in Bitcoin, you might want to do the same. Don't forget to follow for updates. The next big milestone, the Bitcoin halving, is less than 6 months away. There's still a chance to get involved early. Bitcoin will go through 32 of these halvings, and even though the price is higher than it was at the start of the year, you haven't missed out on the lowest prices for alternative coins. Most of the altcoins that could really skyrocket haven't even started to move yet or aren't even available. In 6 months, we'll reach the Bitcoin halving. Remember, back in 2021 at this same time, Solana and Axie Infinity weren't even on the market, and Matic was 130 times lower than its highest value. Charles Hoskinson is gearing up to launch a new token too, because you actually would have 2 tokens instead of 1 token. Actually, let me correct that. The new blockchain that Charles Hoskinson is working on is called Midnight, and its token is named Dust. This is an interesting development to keep an eye on, especially considering the changes and growth we've seen in the crypto world. Just like with Bitcoin and the other altcoins, there's a lot happening, and it's exciting to think about where things might go from here, especially with innovative projects like Midnight entering the scene. Well, if Midnight's got a token in this case, we call it Dust. Midnight is actually a sidechain solution for Cardano, designed to make executing smart contracts on the Cardano network more efficient, secure, and cost-effective. This development is a significant step in enhancing the capabilities of the Cardano ecosystem, offering more options and flexibility for users and developers, with smart contracts being a crucial part of blockchain technology. Improvements like Midnight could really help in making the Cardano network more accessible and user-friendly, which is exciting for everyone involved in the crypto space. Then what happens is, as the stack pool operators maintain the Midnight ledger with those high-performance, high-throughput protocols, what they're going to do is they pay rewards back to the stack pool operators and the ad holders. So some point when Midnight launches, you get Dust and ADA. Instead of just ADA, See, so everybody in Cardano land benefits from that partnership. Suddenly, we're not as aerial as we used to be right now. We're looking for every major partnership we can find. We're like, come to Cardano, come on Polkadot. It was a good run, come on over, come on to Cardano. There's a lot of great stuff you can do, and we'll take care of your blockchain for you real nice. It'll be great. I'm not exactly sure when this will happen, but it looks like the main launch of Midnight might not be until late 2024. Cardano is really pushing this, saying that the Dust airdrop will be great for those who have ADA, for those running stake pools, and for developers. They plan to give stake pool operators and exchanges new ways to make money and reasons to get involved. Developers will get practical examples and a fund to help them work on making different networks work better together. And like what was mentioned last year, I think everyone here has some ADA. So you'll be happy to know that ADA holders will receive a token drop for Midnight. Another altcoin that I'm keeping an eye on, and have personally invested in, is Prisma Finance. It's really shaping up to be a game changer in the world of liquid staking tokens. It's a non-custodial and decentralized Ethereum liquid staking token, which also has a stablecoin backed by it. Plus, there's a governance token involved. If you're curious about how it all works, it leverages Ethereum's proof-of-stake network to allow you to unlock loans where the collateral actually grows. So if you're into liquidity pools or staking, here's what you would do. First, you choose your preferred liquid staking token and use it as collateral. Then, you mint the amount of MKUSD you want. From there, you can really make the most of the yield opportunities through Curve and Convex pools, or even Prisma's own stability pool. And if you have the governance token, like I do, you get to have a say in things since it's decentralized and non-custodial. Now, this has all been audited and verified, but as always, it's important to do your own research. Remember, this involves more risk compared to just keeping your assets in cold storage. Also, keep in mind that the yields, or APRs, fluctuate based on participation. More people joining means lower yields, while fewer users can lead to better yields. A big thing just came up, announced during Binance's Blockchain Week in Istanbul. I'm actually an ambassador for TommyNet, and let me tell you, their aim is pretty ambitious. They're working on creating something like a decentralized internet. Their main focus is to keep the base chain as decentralized and resistant to censorship as they can. At the same time, they want to give developers, the real builders, access to a lot more tools and possibilities. And guess what? They've just announced a Layer 2 solution. We are here because we still don't have the tools needed for entrepreneurs and developers to make that change possible. We're building another blockchain because we believe that Web 3 should have more tools than Web 2. Not less, we believe that Tommy Chain is going to pioneer this new era in usability. It is a fork of ZK Sync, and as such, it inherits all of the values of Ethereum. It inherits the hyper-scalability of zero-knowledge proofs, together with the values of Ethereum of decentralization, trustless, and freedom. But on top of that, Tommy Chains adds a layer of simplicity, of accessibility, and above all, of reliability. We built another blockchain because we understand, just like Microsoft did at the turn of the century, that the key to industry transformation is enabling developers. We're building on Ethereum because we want any developer of the decentralized application that belongs to the biggest blockchain community to be able to migrate their applications into the Tommy Chain without any friction. We're building an E because we believe that the ERC 40337 upgrades that were made this year, such that allows smart contracts to be used as abstractions and on-chain identifiers, that will allow a great UI and U flexibility. I find it really fascinating that they've decided to build on Ethereum. I personally like that choice because, as of now, Ethereum is where all the developers and liquidity are, so their strategy is to tap into that rich resource. Now, the announcement they made was quite lengthy, over 30 minutes, but let me share with you just a quick 60-second snippet. This part really highlights what sets this Layer 2 apart and how they plan to benefit developers. We're building another blockchain because in order to have a circle of a circular and sustainable economy, we need to review and improve our incentive models right now. As it stands in the Ethereum network operators receive 100% of the fees. And that's great. They should be rewarded because they are doing incredible work. But what about talking creators who actually drives the traffic on the blockchains? It is the tokens, it is the utilities that they provide. So we believe that token creators should also be rewarded for the value that they bring to the network. What about wallet developers right now? There is no business model for them on the blockchain. That is why we are introducing a shared gas fee incentive model, where network operators will receive 40% of the fees, token creators will receive another 40% of the fees, and wallet developers will receive the remaining 20%, so that we can have an actual circular economy. Finally, I want to talk about the top Bitcoin ordinals at the moment and why Elon Musk seems to favor the Bitcoin NFT ecosystem over Ethereum. But I mean, NFT is the funny thing is that the NFT is not even on the blockchain. It's just a URL to the JPEG, so it's not even like you should at least encode the JPEG in the blockchain, because if the URL, if the company housing the image goes out of business, you don't have the image anymore. Well, the big names in this area would be ordinal punks and taproot wizards. As for the newcomers making waves, we've got Bitcoin frogs and bitmap rare sats. But remember, this space is really new. I'll make sure to keep you posted with updates. Alright, that wraps up our crypto journey for today. If you found this info as intriguing as a Bitcoin in a blockchain, don't forget to hit that like button. It's like mining for digital gold. Share this video with your crypto buddies and subscribe to stay ahead in this ever-changing world of cryptocurrency. And before I sign off, here's a little Bitcoin joke for you. Why did the Bitcoin break up with its girlfriend? Because it couldn't commit to a relationship without proof of work. Keep hodling, and I'll catch you in the next video.